And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show.
Welcome to the show. This is Andy Webb with Lifestyles Unlimited. And as always, we are working on your financial freedom. Yeah, you heard me right. This is Andy. I'm back again. I'm filling in for Al here on Tell Al Tuesday. You probably heard Al. He got back to the radio a little bit. He's still dealing with some of that post-back surgery recuperation. So, Al, we wish you well. You're in our thoughts. But I do have the opportunity to fill in today on Tell Al Tuesday. And I'm joined by a tremendously, hugely successful apartment investor. Now, he is invested in right now over 3,500 apartment units. We often talk about units or doors, some as a passive investor, but over half of that number as a lead investor himself. We'll hear a little bit about what a lead does here in a moment. But I'll tell you, this guy is absolutely killing it. And I have some notes here, show notes that I get before the show, and just scanning through some of his lead investments. Get this 75% return in a very short time. That's pretty darn good. 113% return. Hey, that means more than double my investment. That's great. 200% return. That is out of the park. 275% return. Okay, Andy, stop, please. I'm getting jealous. I wasn't in any of those investments, and I know you can't beat that. Or can you? 400%. 400% in 1 year. Who is this guy? And where is he putting together these investments? I am excited. I am feeling very exuberant because, boy, these are great numbers. Let's find out who this is, and let me welcome to the show Vaibhav. Hey, welcome to the program.
Hey, thank you, Andy. Good to be here.
So great numbers. I think we'll hear about some of those. That 400%, that blows me away. If I had put, I don't know what your minimum investment was, but if I had put $25,000 into that deal, a 400% return for the listener, that means I'm getting $125,000 back. I made $100,000 profit. That is amazing. So, Vaibhav, before you acquired this superhuman capability to do these tremendous deals, these investments, why don't you tell us a little bit about your background? Who were you before becoming this real estate investor? Tell us a little bit about your family, where you're based, and all that good stuff.
So I'm an electronics engineer from India. Came in U.S. in 2006, and I was working here in IT. While working, I completed my MBA here, and worked in IT for 14 years. Went and married to Komal, my wife, and we have 2 kids. And after 2012, from 2012 to 2018, I owned my own IT consulting business, staffing business. And then during that time, I built and managed large teams, IT teams with huge budgets. And then right now I am in Arizona. I used to be out in California. It's been more than a year now that moved to Arizona. And
what took you to Arizona?
My investments. So all my investments are in Arizona. I was fine as a remote lead, but just wanted to pay much more attention as the portfolio grew. And that's why I moved to Arizona. Yeah, and a lot of other things. A lot of other things that we talk about California, but let's not go there.
Yeah.
But just wanted to get out from there.
Well, your first investment as a lead or a syndicator, general partner, that was in fact in California, was it not?
That is correct. That's where I started my journey as a lead investor in Lifestyles.
Now, let's talk about Lifestyles. When did you become a member? You're in California. We're in California. Now you're in Arizona. Back then, how did you even hear about Lifestyles Unlimited?
Yeah, so I used to be, while I was doing my IT business and while I was doing MBA and working in IT, I always wanted, like everyone else, wanted to make extra income. And I got into stocks. My dad was a stock broker, and back in India, he was also a real estate investor. So I got both of that from him, and then I started stock trading here. But I went in too deep. I went in as a day trader, options, currency, futures, commodities, everything. And and it paid, and then it took everything away and some more. So I'm like, okay, I need to find something else to get my energy somewhere else where I can benefit and not have the family life disasters, right? So I went into single family, and in Bay Area, I used to be in Silicon Valley, where I cannot buy anything for a cash flow. So I went outside to Sacramento, which is 1.5 hours, 2 hours away from where you live, based on where you live in Bay Area. And I started buying there for cash flow. I was doing well with single family, but at a certain point, I'm like, I can't, if I want to replace my income or be retired from corporate America, I might need 100 of this single family homes. So there should be a better way out there. And that's why I was just going on forums and looking for something that I might be missing. And that's where I think one of the users on one of the forum commented about Lifestyles Unlimited. So I thought of checking it out, and I was not a radio listener or LU radio listener. So I just found it from a forum, and I joined in 2016. One day into the free training, and next day I become a preferred member. Just online, everything online.
I've got Vaibhav with me. I already mentioned some of his, maybe one base hit, a bunch of home runs, and even a grand slam. These are phenomenal numbers. We're going to hear about that. But we learned in the prior segment, who is this guy? And we were just talking, Vaibhav, about when you joined. You joined Lifestyles Unlimited in 2016. How long did it take you to exit corporate America after joining?
2 years.
2 years.
Yes. Well, it was 5 years was the goal, as Lifestyle teaches, but I was able to do it in 2 years. And 20 years earlier, then I plan to retire without Lifestyle.
IT guy, engineer, MBA, California, now Arizona, doing the stock thing, figured out that doesn't work. Had a plan to retire in 20 years, did it in 2. Lifestyles tells you 5 years or less. Again, here, proof of concept, 2 years. You can do it too. We're going to hear a little bit more about how throughout the balance of the show. Now, I've focused with the numbers anyhow, Vaibhav, so far on what you're doing as a lead investor, but you're not just investing as a lead investor, you're also investing as a passive investor. Can you tell us a little bit, just so the listener understands, what is the difference in those two? Who's doing what in each of these investments?
So there are lots of analogy out there to explain this, but in simple words, a lead investor or a syndicator, promoter, is the one who is doing all the heavy lifting and finding the deals, putting it together, creating pro formas, what's the return will be possible, and working on all the taxes, asset management, property management stuff. And then passive investor is, as it sounds, it's a passive. So your investment is passive. You invest. You subscribe to the lead investor's deal, and that's it. And then you wait and get the mailbox money or ACH money.
That 400% return after 1 year, that still boggles my... I'm crying a little bit here as I'm talking to you because I've not been in any of your investments, and I need to get in there next time. Wow, just great numbers. Why would somebody want to be a passive? I mean, you versus a lead. Is it just hands off? I don't have to worry about it, right?
Yeah. Well, I'm a passive investor too. I like to keep my money working, and so I invest in the deals within Lifestyles that come across. And it just gives me so much time and freedom on what I want to do personally in my life. Maybe it's a job that you like. If you are good with your job, if you are passionate about what you are working on, you can continue doing it while you invest in real estate and get returns like 400% while doing nothing.
Live your lifestyle how you want, basically. Work if you want to work. Become a lead investor if you want to become a lead investor, which essentially is a job. right, Vaibhav? But
Correct.
why would you choose to become a lead? Let's ask the countervailing question. If I don't want to just sit around and wait for mailbox money, what might drive me to be, or what drove you to become a lead investor by comparison?
Yes, as I said, I started with single family, and I really liked how the cash flow it was generating, the depreciation that I was able to take, and within that part of income. So it's kind of like a tax-deferred money. So I liked all that, and I was really passionate about it. So first of all, if you want to become a lead investor, I think you need to be very passionate about what you are about to do. And as you said, it's a job. I retired from corporate America, but I got another job, and it is not an easy job, right, to start with. But if you're passionate about it, you like numbers, and you don't like your job, then you do this, right? You become a lead investor, and you can use the investors' money, other people's money, to buy good, better, and bigger communities which by your own maybe you are not able to buy.
Absolutely, yeah. And I guess a lead is, just for the listener's sake, a lead is a term we use at Lifestyles Unlimited. You may not hear that out in the broader market. If you go to some other groups in the industry or whatever else, they'll call it a syndicator. You said promoter, Vaibhav, that's a good term, general partner. There are a lot of people that are out there investing in apartments. We're not the only ones, but we call them leads because they lead the deal, and they lead you to success, as we've heard. I mean, if I had been in that investment, let's say I put $200,000 into that 400% returning deal, that would have made me a millionaire. That would have gone from 200 to 1 million. Now that's a home run. That's a grand slam. We don't see those all the time, of course. Or maybe we do. Is that maybe you could tell us a little bit about Arizona, because you went from California. Every other investment that I see that you've done, it looks like you've done 10 investments as a lead. The balance of those have been in Arizona. Maybe you could tell us about that market. Help us understand. Is it just Arizona? Is that hot, that phenomenal? What's going on there?
Well, Arizona is hot, and but again, I choose the market first before choosing the returns on the assets, right? So when I was in Sacramento, that was a phenomenal return too. It was 125% return to investors in 1 year.
Yeah, very good.
In 2017, 2018, that was again very, very rare. In 1 year, we can get that kind of return. But again, I choose the market first where we have more tailwind compared to headwind. And Sacramento, while I was investing, and for 3 years after that, it was number one rent growth market in the country. But it was just small for me to grow. And so I was looking for other markets, landlord-friendly and lots of other things, which is on a growth path. And I think Arizona was just stuck in it just because, the people were moving, a lot of people were moving. So my choice was either Texas or some other market. And I didn't want to go to Texas. We have a lot of presence there anyways. So I was just looking to crack a new market. And Arizona was Texas 5 years ago or 7 years ago. So it was just there, and it was going to be where Texas was at one point, right? So that's where I saw, and I think I was lucky and blessed, I think, that I was in time. Didn't buy much properties, though. I should have bought more, it seems. But that's always the case, right? It's always hindsight. But that migration, job growth story, and asset price, rent to asset price ratios were amazing. Where the properties were cash flowing great. I'm still paying on many of my properties 20 plus return cash flow, even after taking 200% in refinance.
Yes.
So,
yeah, I'm looking at that first one. I guess it's the first one you did out there in Arizona, in Phoenix, 2018. Yep. You did a 200% cash out refi. That is not a taxable event for the listener. Again, if I put in $50K, I'm getting 100 out right now. My 50 investment sits in there and continues to earn a 20% annualized cash on cash return. Great numbers. We'll be right back. I got more. Stick around. Vaibhav has more.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
Have you ever wondered what it's like to be a part of Lifestyles Unlimited? Del Walmsley tells you what to expect when you join us for the next live online free workshop.
We've been here for 30 years. Over 30 years, we've had and or do have roughly 50,000 plus members all over the United States. We have retired tens of thousands of people, and it's just incredible what you're going to find that you're going to be in here. Not only are you going to find the greatest amount of information and education, you're going to find the people, the most open people you've ever met in your entire life.
Come meet the people at Lifestyles Unlimited who will help you change your life and empower you to stop depending on a paycheck, your 401k, IRA, or Social Security for your future. Register at lifestylesunlimitedworkshop.com. At the free workshop, we'll teach you the 5 ways to make money with real estate, cash flow, equity capture, appreciation, equity buildup, and the tax advantages. Like Del says, we'll open our books and show you how the numbers work with both single family and multifamily case studies. Register at lifestylesunlimitedworkshop.com.
Welcome back to the show. I'm your host, Andy Webb, filling in today for Al, and I'm joined by Vaibhav, one of our lead investors in the Arizona market. He was just telling us a little bit about Arizona, having migrated from California, did his very first syndication or lead investment in Sacramento, back when that market was very strong. Things change over time, right? And Vaibhav, I like your strategy. You're looking to the market to see where to go next. Now, you've been in Arizona for a while. I see that you bought some in 2018, 2019, 2021, as recently as 2022, so still active there. Within the Arizona market, are there particular cities that you are targeting, places that we might want to go look and consider as passive investors?
I strongly focus on mostly on 2 locations, 2 MSAs. One is Phoenix, and the other one is Tucson. I have lots of investments in Tucson of late, just because, again, that market is taking off and will be very soon very successful. The 400% return was in Tucson, anyways, by the way.
Okay, and some of these you've sold. Now, some of the numbers I threw out in the first segment, 75% return, 113, those aren't even the full cycle returns. You mentioned just a moment ago, one of these was as a result of just doing a refinance. So we don't even know the full picture yet. Those returns are going to get even better. Tell us about your strategy when you go into Phoenix or into Tucson. Are you always looking to do a refinance somewhere midterm? I mean, some of these clearly you sold very quickly. How do you put your business plan together, and what is motivating your action, whether it's from a refi or a supplement or just a simple sale perspective?
Yeah, we go in. I go in with a very broader mind, but just give a scenario that this is the conservative scenario that can play out, and never promise anyone 1-year exit. The first one in Sacramento, 1-year exit because, we got our pro forma 5-year return in 1 year. And the rent cap stories were starting to happen there. And I'm like, okay, take our chips off the table and let's go somewhere else. Other property, Casa del Coronado in Tucson, which we sold for 275% net investor returns. It was just feeling like we are in top of the market. And I wanted to get my C-class properties or the properties which are getting tougher to manage. I wanted to take that off the table while the market is at the top. So that's why we sold that. Otherwise, there was no reason of selling that. And the only third exit that we did was 56 units, a smaller community, which was planned to be a value add and exit in 1 year. That was supposed to be my IRO, but I just syndicated it just because it was a part of the portfolio.
That's great. So you were going to do an IRO, and for the listener, that stands for Independent Rental Owner. That's a term in the industry that simply means I am just going to go buy my own apartment community all by myself, maybe with a partner, but it's not a syndication. We're not taking money from passive investors. So that's the first time we've talked of an IRO. Are you still looking to do an IRO down the road? Is that in the broader plans for you, for your goals and your personal objectives?
That's always an objective. I just need to find the right property as I found last year. But I think right now it's just my drive is my investors. They need to invest and they need to park their money, and they keep asking. And so I think that's my drive, and I might keep doing syndication for a while.
Hey, very good. You're doing a great job at it for sure. And I'm curious, so you mentioned your passives. I'm sure you have investors that have gone from investment to investment with you. That's very common. You get in with an aspiring lead, we call them, who hasn't done an investment at all. They're very thrilled to have you come along for the ride as a passive. They do well because they're very exuberant. They're very eager to do this thing. And when they get into the next investment, they open it up to their prior investors as well. What about for a guy like me or other passive investors that are listening now? How the heck do I make sure I get into your next investment opportunity, thinking about that 400 or even 200% return? What do I do, Vaibhav, to get on your radar? Do you have any recommendations for the passive investors out there?
Yeah, normally I take in each and every deal, I keep some slots for first-time investors within LU. So if you've invested not with me but with other deals, you don't get that priority compared to others, exactly the first-time investor. But I always keep the first-time investor slot and even less than my minimum at that time. So you just have to email me very ahead of the game. I think what passives are doing, and many are doing amazing job introducing themselves, emailing multiple times and saying their story and introducing or shaking my hand somewhere where we meet in person. And I think those are the things that passive investors need to keep doing just to get in the eyes and ears of lead investor with whoever they want to invest with.
Surely. It's basic networking is what it is. And for the listener, if you want to, Vaibhav, you've been on a few other shows. If you want to catch some of the other shows that he has been on, I want you to go to lifestylesunlimited.com, go to the radio tab. Those are archived there. If you missed any of the earlier part of this show, you can catch it there as well. And you can type in the search bar networking. There are a few shows where we talk about effective networking because it is a skill set, and it is one that you can very easily learn how to communicate with a guy like Vaibhav. It can be overwhelming. Man, this guy's done 10 investments as a lead investor, for these huge returns. I'm a little nervous. I'm kind of scared to talk to him. Don't be. These are just normal people. Vaibhav, I called you a superhuman investor, but we're all, when it comes down to it, regular guys, really. We've just chosen a different path away from IT, away from engineering, away from that MBA degree that you have, right? But you do have to get out and introduce yourself and talk. And by the way, Vaibhav, I know you're probably going to be there. We've got our Wealth and Passive Income Expo coming up next year in my neck of the woods in Irving in Las Colinas, Texas. Are you going to be in town are you planning? Let me ask you that. It's a little bit ways out, but are you planning to be in town for the expo?
Definitely. I'll be there.
Definitely. Good deal. So whether you are a member or not, you can come to the expo. It's the largest in-person gathering of successful real estate investors, and that's what it comes down to, networking, meeting guys like Vaibhav, myself as well, anyone else that you want to talk to. I mean, there's a tremendous opportunity over multiple days. You can learn more about that if you go to, our website, same one, lifestylesunlimited.com. There's a button there. So, yeah, that's February. That's going to be February 15th through the 18th of 2023. So I'm sure you'll be networking, meeting with the big dogs, meeting with the little dogs, meeting with as many people as you can, because it is a long game. And the ecosystem, Vaibhav, I think is very, very important, and you've experienced that. How has the Lifestyles Unlimited ecosystem helped you as a lead investor to build your business?
Oh, amazing. So, I never would have thought. I still spend some time that is this where I am really? It's just a great success, and I think lifestyle was the very important part in all of this. My mentors earlier stage, I think, helped a lot understanding this business, and a like-minded community, right? I network with a lot of leads. Even we have our inner circle of leads who we run ideas through or issues through during operations, during management, during purchasing, anything, things like that. I think you can't replace that with anything else. So like-minded community, mentors, operational consultant, all the help that you need. You just need to ask for it. And I think that is very important for someone who is starting in a real estate business from IT or from any other profession, or even if you are in real estate. I think this help is just priceless.
We've got a wonderful guest, Vaibhav. He's been a member at Lifestyles Unlimited since 2016, retired himself very quickly from corporate America in 2 years. We tell you can do it in 5 years or less. Well, he beat that by far. How did he do that? By becoming a lead investor. We told you what that is earlier in the show, as well as a passive investor. In fact, we defined both of those. Now, Vaibhav, and we've talked about some of the great returns we've seen here in these apartments that you are leading as the syndicator, as the general partner, but I want the listener to understand, how is it exactly that we're achieving a 200 or a 275 or even a 400% return? What is the magic that you're working when you go into one of these communities? Maybe take us from start to finish, pick one, doesn't matter which one. What did it look like before you bought it, and what did you do to reposition and turn that community around? Help us understand that.
So I think primarily everyone has to understand that these returns were not pro forma at this return rate, right? But, some of them will be the market driven. The market was high, and we don't exit if the market is low. This is a long-term investment, and we just time it when the time is right for the exit. So if someone says that just the market was high, well, yes, these are the returns because of that, some of the exits. But if we wouldn't have received that, we would have just hold on to the properties. And then when the time is right, we would have sold it at that time for similar returns. When I buy the properties, as I said, first and foremost, I choose the market. I choose the submarket. And after that, I choose the location. And after that, it's the asset type. I go with 80s or newer product, and I only do, till now, I only done individual metered properties. So I need to have my bones right. Everything other than the bones, we can fix it. We can, renovate the units. Most of my properties are not premium, diamond class, platinum class renovated. The properties that I'm doing right now are some platinum, but I'm just doing more of a curb appeal. I'm doing interior renovation, but most important thing is just efficiency, right? I try to find properties with under market rents, true under market rents, where I can really increase $200, $250, $300 in rent. If I can see a lease trade out of at least 25%, I think those are my properties that I go with. And then we just work on how to increase that income by other income and where all the fats are in the expenses. Try to buy properties from self-managed owners, long-time owners, and deferred maintenance, rundown properties. But those are the few things so there are a lot of things that I check before I buy a property, but most important is the market, submarket, location, and the asset class.
So you've got very strict investment criteria. We've talked on prior shows about your investment box. That could be a single family house if you're doing what I do, or apartments if you're doing what Vaibhav and other investors do as well. Very strict criteria there. But you made a point, and I want to come back to this because I've focused very heavily on the returns, which are after the fact. But when I, as a passive investor, Vaibhav, when I look at one of your investment opportunities, you're going to present a pro forma, which is essentially the forward-looking budget. I want the listener to understand this. And it's going to present a series of numbers as well, where you think the returns may land. And if you're performing to those returns, well, maybe, like you said, it's time to refi as per the plan or even sell. In these cases, you've outperformed. That's the big difference here. I think you're making at the start. It's a very, very valid point. But every deal you go into, you are underwriting. You are being conservative. I'm not going to see you tell me I'm going to get a 400% return, right? It's going to be somewhere south of that. It's just that that's how these markets, because you have a sharp eye, and you've said this multiple times, and I want to underscore this as well for the listener. You're looking first and foremost at the market, and then drilling down. Now, we heard about the box, 80s and newer, good stuff. Individually metered, that's referring to the electricity, right? And so on. So very, very strict. And under market rents, so for the listener that hears 200 or 300 below market, that may not sound like a lot, but if you have multiple units, 100 units, and you take those up and that drives cash flow to the bottom line, we won't talk about how that drives the bottom, the value, but that has a massive leveraging impact on the value of that property when you take those up. So curb appeal, interior, getting those rents up. What else are you looking at as a lead investor?
Well, I just look for a lot of, that even passive investors, not everything that a lead does, I think, is known, right? But we do put a lot of efforts in, the financing, putting the right debt. I think that's very important.
Huge.
Especially in current market, but also every time else, right? So I think putting a right debt on it, understanding the finances, working on how to save the capital event or how to save those capital taxes. So one of the example is that we sold our C-class property in Tucson, 208 units, gave everyone 275% return, which is 375 basically if you include the capital. And why I'm seeing this is because this is what I try to do now. We saved not paying taxes on any of that by doing a 1031.
Oh, did you, on the apartments? Okay.
Yes. Yeah, so we did the 1031, and 95% of all the investors joined, and we got into an amazing community, B-class community, for less than the price that we sold the C-class community. So we did great there. So those are the things that, as a lead, I just strive to keep doing, just better and better, find efficiencies from wherever I can.
Yeah, that's good stuff. And for the listener as well, go to our website, in the search bar, put in 1031 exchange. There are a lot of shows, a lot of content on this concept. It's a way to save, or to defer, I should say, the capital gains taxes, roll those into the next product. We do it on single family all the time. It's very easy. When you get to the apartment level, it's a little more complex, but great move to protect your investors and get into, as we heard, an even better deal. You said you went from a Class C to a Class B. What does that mean?
Well, Class C is, so there are lots of, there are mainly A, B, C class. A is very new and maybe in a urban core market, which is good properties, very good properties with very great amenities. That's not our market. That's not our target market. We work in B and C. So B is somewhere where, we may find our residents for who earns more than 100,000 or so in income, and they want a nice place to live, but not an A class. And C class is where our blue-collar workers and working-class families live. This is the market that I was in, and I am in. It's just that whenever the C properties start going to C minus, we try to exit this. So that's where we moved from that C property, which was going to C minus, kind of during COVID. Lots of activity started during many places. So that was one of the places, and we were like, okay, I wanted to move out. And so from C, now we go to B, and why we do that is just because it's less delinquency, less headache, less maintenance compared to C-class property. So
Yeah, you're stepping up your game over time in essence. Yeah. So we've got about a minute left or so. What are your mid and long term goals, if you can squeeze that in for us? What's on the horizon for Vaibhav and his family?
I'm trying to set up my business for long term. Trying to organize it. I hired an asset manager who is managing so many day-to-day operations, but while I'm involved, and just organizing all of that, my business, so that I can take some more time off. And long term, I like what I'm doing. Keep doing it till my investors want it. And may in future, check on different asset classes.
Very good. Hey, that's good stuff. I like what you're doing, too. I'm just an outsider looking in, and you have phenomenal numbers, as we've heard. I do look forward to seeing you at the Wealth and Passive Income Expo. Again, for the listener, go to lifestylesunlimited.com. There's a button you can click there to learn more. Vaibhav, thank you so much for joining us today and telling us your story, 2 years to retirement and building a tremendous portfolio. Just amazing stuff. So thank you again. And for the rest of you out there, remember, it's not the money, it's the lifestyle. You have a good day.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented